Hey Big Bulls, welcome to another episode of Bullseye. Today we talk about if Paytm is going to turn profitable soon, Yes Bank's stake sale drama, and the SME IPO Index being in red. Is it a cautionary signal for investors? So let's start. From QR code payments at local stores to making those transactions on your phone, Paytm is everywhere. But despite all its popularity, this is a company that has struggled with financial losses for years. But FY25 seems to have been different. It has been a bounce back year with its business numbers starting to look up. Its profit is almost at break even, which means its revenue is nearly matching its expenses. While it's not quite making a profit yet, it's no longer losing money, which is a big step forward for a company like Paytm. The fintech company even managed to cut its losses significantly in FY25, all thanks to streamlining and cost cutting. And now, here's the moment it's been waiting for, becoming profitable. In fact, its CEO Vijay Sharma is all in on the next quarter being the one where Paytm finally turns the corner. So what's the game plan? Well, the company is keeping its eyes on the prize. It's going to continue to focus on payments and the distribution of financial services to drive sustainable, profitable growth. And of course, that makes sense since the payments business is Paytm's big money maker, contributing about 54% of its revenue in the Jan-March quarter of FY25. However, this path has not been without its bumps. Paytm's hopes of turning profit almost went up in smoke when the RBI uncovered some serious compliance issues in 2024, leading to the suspension of Paytm Payments Bank. The company had to shut down some of its operations, sell off others, and even lay off employees. That also left Paytm's UPI services hanging since Payment Bank runs the banking side of the app. And as if that wasn't enough, Paytm soon found itself under the microscope of SEBI and even the ED over more regulatory issues. All of this took a toll on its stock, which had a pretty flat debut in November 2021 and has delivered negative returns since its listing. Given these challenges, things are looking up for FY26 with expectations of Paytm being profitable plus a bunch of other growth drivers. As for whether they will actually pull it off, that's something to watch out for in the next quarter. Now, when a retail favorite stock like Yes Bank is in spotlight, it's enough to get investors excited, even if it's just speculation. And that's exactly what happened earlier this week when the buzz about its much anticipated stake sale pushed the stock up 10% on Tuesday. That's because multiple reports hinted that Japan's SMBC is closer to buying a majority stake in Yes Bank. If this actually happens, SBI, which has been trying to find a new owner for Yes Bank, could finally exit the bank 5 years after it first stepped in. To understand why this is important, let's rewind to March 2020 when Yes Bank hit a rough patch. Back then, the Reserve Bank of India had to step in with a reconstruction plan. Why? Because the bank wasn't meeting liquidity norms and its founder Rana Kapoor was shown the door after the RBI denied his reappointment as CEO. So, to stabilize the bank, a group of private sector lenders led by SBI pumped in a hefty 10,000 crore rupees to keep things afloat for Yes Bank. And now, SBI holds around a 24% stake in the bank, followed by lenders like HDFC, ICICI, Kotak, Axis, and LIC. And around 62 lakh small retail investors hold around 22% stake in the bank. But here's the thing, this stake sale talk isn't exactly new. The Japanese bank was eyeing a majority stake in Yes Bank before too. But talks stalled last September since the RBI wasn't too keen on foreign banks calling the shots for an Indian bank. You see, foreign banks haven't had it easy in India, with tight ownership rules, tougher capital norms, and a banking sector largely dominated by the government holding them back. That said, the RBI has shown flexibility in the past, allowing foreign institutions like Fairfax and DBS to take over smaller banks such as CSB and Lakshmi Vilas Bank, respectively. Now back to Yes Bank, it has made clear that all this remains a speculation. So now will they or won't they? That's something that remains to be seen and something that market participants will closely watch. Now 2025 did not kick off on the best note for benchmark indices like the Sensex and Nifty. But they have since bounced back and are now up around 3% each this year. However, one part of the market is still struggling. That is the SME IPO Index. It's still in the red, serving as a reminder that chasing high-risk IPOs, especially in the small and mid-cap space, can be a risky bet. For context, the BSE SME IPO Index, which was launched in 2012, tracks how small and medium businesses fare after listing on the BSE SME platform through IPOs. And so far in 2025, the index is down over 23%. As per an ET report, 80% of these stocks in the index are deep in the red. Blame the slump on wild swings, low liquidity, and shaky fundamentals, all made worse by the hype around these seemingly cheap stocks. This correction comes after the index hit record high levels in 2024 as tons of SME companies rushed to go public. Retail investors couldn't get enough, chasing those big gains, piling into IPOs that were getting even subscribed over 400 times. And when some stocks shot up around 200, 500, and even 1000% post listing, that just poured fuel in the fire. It was a full on frenzy. No surprise then that the wild rallies and shaky fundamentals finally caught SEBI's attention. The regulators stepped in with tighter norms to keep things in check and protect investors. Now, SME companies need to show profits, face tighter rules on how they use IPO money, and promoters have longer lock ins. It's all about bringing more credibility in the game. So yes, SME segment may have its potential, but not without its pitfalls. Investors need to stay cautious, look beyond the hype, and do their homework, and back businesses with strong fundamentals, especially if they are in it for the long haul. That's it for today. Thanks for tuning in. We will see you next week with another cracking episode of Bullseye. But before you go, don't forget to subscribe if you haven't already, and hit that bell icon so that you know when the next episode drops in. We'll see you next week.